Hey guys, Mike here. So, oh boy, what a day it was. And I mean, it's one of those rare ones, but we have seen this quite a few times. And when I show the charts, if you don't laugh, cry, whatever it is, I'll be very surprised because it was an interesting day for sure. But we're gonna go into it. I'm gonna keep this video like very simple because we have some big data coming up tomorrow, which seems to cause a lot of volatility in the market. It could turn the market around, it can turn it up on its head. And we're going to go into what that data is as well and how the market has reacted the last few times, which might surprise you, okay? I do find it funny that the market has put us in the position it has put us in going into what? Another kind of inflation print, okay? Not CPI, but another type. And so, again, this is going to be important to understand. So we're not going to go into all these different charts, looking at all these different stocks because it's going to change tomorrow. I'll guarantee it's going to change tomorrow, okay? But we're going to look at the indexes, and one very key thing I was telling members about you have to be aware of when you're looking at this stuff or when you're looking at your investments for that matter. Now, we did have data come out today. Jobless claims coming in less than what they expected, and then GDP came in actually higher than they expected. So the rates should have spiked, not dropped, which they did. And the market initially, went down, and that was the way it was supposed to be, but then it recovered and all that fun stuff. That's a whole different story there. But you can see, you look at GDP there, you look at GDP to the left, even though we're sitting at higher rates, right? There's so much other stuff going on versus 2010 and 2018, we were pretty much almost at zero rates, right? Same kind of GDP going on. That lets you know how much money is still out there in the market. Now, key thing here today, which, I mean, what a crazy day it was. Here's the bottom this morning. We dropped here on news, yield spiked, all that fun stuff. Oh boy, it's going to be a super red day again. Here we go. Boom, takes off, and over the rainbow we go. I told members, I guess that's what we need to start calling this pattern here. But we literally robbed the store, ran around a big circle, and returned to the scene of the crime. And I'll bet you money, if I take this away and look at exactly where it stopped and got its bounce right here, I will bet you, oh, look at that right there. What is that? Pop quiz. That is a fair value gap right there. Especially I like the 5 minute or higher, 15 minutes even better. And I'll bet you money that's exactly where we bounced because I was watching this all the way to the end. And we'll draw it across and look at it. And you can bet money, well, look at that right there. That's exactly where we bounced. We mitigated that right there and held. Okay, we'll see if we go down again tomorrow. A lot of this was going to depend on that data coming out pre-market, okay? And now let's go into the S&P here and look at this right here. We talked about yesterday, if we break down and continue to sell, what's going to happen? There's a gap right there. What came down into the gap and sucked back up and actually went above that trend line. I thought, okay, cool, we're good to go. And I'm going to pull up the moving averages in just a minute to show you what's really important to watch out for. We sucked up, and then of course over the rainbow we went right back down to where that bottom was, back into that gap. And you can see it tried to retest, get above that trend line again, failed. Okay, we look at the moving averages. Where are we at? Below the 50 now. And below that trend line, which goes all the way back to October of 2023. So that has held for a little bit. Now it has broken that. And so the big thing to watch out for here is not the break. It's like the retest, right? Like when we get it back above it, do we fail on the retest or do we finally go back above it? That's what we got to look out here for. Okay. And so again, we came down below it, sucked back above it, and then just fell right back below it again. You can go back and look at 50s. We'll have to see if we get a retest of this tomorrow, break back above it, or do we continue to drop? If we continue to drop, you see where the 100 moving average is at? You see where support's at? That would be a total of almost 7%, right? I think a good place would be right there because you have liquidity there, you have a moving average, you have some support built out right there. I guarantee if I draw the fibs, it's in a discount range. That would be the 0.79 Fibonacci level. If you're going back to where, it went up from last time, if you say, no, I want to go from the big drop right here. Well, then you're at the 0.50 fib right there. Okay, so kind of keep that in mind if this continues to drop. That's what we got to look for, okay? Now, when you go over the Qs, real funny, where they leave us setting? Right there in the bottom of that channel, right there on the 100 moving average, okay? Again, no retest of the 50 today for this one. That's the key to look for that. If we start to move up tomorrow, does it retest the 50 and get rejected? That's what we're looking for on pretty much all of these, okay? But it is funny they left us right there, all right? It pulled right into this liquidity right here, that daily fair value gap right there. That's where it pulled. That's where it's held. Again, it was all over the place. It was up 0.8% at one time, down like 0.8%. So it was a hot mess on that one. And when you look and pull these fibs, this one's taking a bigger beating, right? If you come back down to that big move right there, we're already below the 0.50 Fibonacci level. If you pull it up to that move right there, we're actually at the 0.79, which is where we held exactly. Both magical levels, let me tell you. And you can see, I mean, we haven't seen the Nasdaq 100 drop that much in one day since October of 2022, because they have been taking profits and selling the heck out of those mega caps, out of AI really is what it's been coming down to. Nvidia's been under a lot of pressure. All the semis have been under a lot of pressure. Obviously Tesla dropped like crazy. Google's under a lot of pressure. Now IWM, different story, and this is simple. What's it doing? It's wedging. That's what it's doing. Again, what are we left here to do? We must have important data coming up tomorrow. We sure do. And so what's it doing? Like it always does before we come up with this data stuff. It wedges, right? And this can go either way, just like Tesla. It can break down or it can break up because it's not setting higher highs and it's not setting lower lows, okay? And so it's waiting for tomorrow to make this move. And so if data comes in super hot, the market don't like it, yields spike, guess what? You're going to be sitting here crying in your Cheerios if you have a lot of exposure to IWM, and if you don't, you ain't going to care, okay? But on the other hand, if you have exposure to it and you're really waiting for this to pop, and especially if you're like Tom Lee, then of course you're going to be smiling like crazy, you know, like you just won the lottery or something probably, okay? So that's the nuts and bolts of IWM and what's going on with this tomorrow. Another thing that's funny is, you know, obviously semiconductors have led the way. Look where SMH ended up today. Right here on this trend line. That trend line goes all the way back to November of 2023, okay? So, and it's held. Each time it came down to it, and where's it sitting at? I always love when they leave a setting, you know, especially tech-wise, in the Qs and setting in semiconductors at this level, and there's also a 100 moving average right there sitting on top of. And the reason why you can look at this one, you can look at any of them really, but the real reason you want to look at this one right here is because of what it actually holds. It's going to let you know exactly what's going on with semiconductors. So you don't have to look at each one of them. Because of July 23rd, you can see NVIDIA 23%, Taiwan 13%, Avgo 7%, Qualcomm 5%. So, I mean, you're looking at over 50% sitting in 5 stocks. So if it's going down, it breaks that trend line, you know the big boys, which means pretty much everything, is heading down with it, okay? And so you can just, instead of monitoring NVIDIA and AMD and all the rest of them, Avgo and what is it, SMCI, which has been getting obliterated, just look at that. If it breaks that trend line, well, that means semis are in a hurt locker, okay? Now, we do got data coming out tomorrow, and I know it was like one of the members asked me, and I hear you guys ask me all the time, I see it in the comments, like, do you even believe the data? I don't care. It don't matter to me. I stopped believing in government data a long time ago. I showed you guys videos where they just change how they calculate it if they don't like what they're getting, right? They change how they did inflation. All of a sudden, inflation looks great again, or coming down a lot, I should say, right? They changed how they did unemployment during 2020, and all of a sudden they go, okay, it ain't as bad as we thought it was. You know, they're just going to change it, and that's fine with me. I don't care. What I care about is how the market reacts. That's all I care about, okay? I want to see if yields are dropping, yields are rising, all that fun stuff. That's what makes you money, not if you believe in what the government data says, okay? I think they've proven we can't really trust what they're putting out there anyway. Just look at how the market reacts. And of course, what do we got coming out tomorrow? All that matters, core PCE price index month over month is going to be the big one. You also have personal income and personal spending, okay? Look at how PCEs come out lately. Let's see here. We hit it there, we hit it there, we hit it there. We came in actually under right there, and we hit it there. So we haven't come in over the last 5 times. Forecast is 0.2%. Now, if you look at the last couple times, which you see one, we hit it on the dot, the other one we came in under. I'm going to show you IWM and the Qs. This is super volatile. Immediately, IWM spikes 1.22%. Why? Because the yields fail, and then it just sells off and dumps on us the rest of the day, right? You see it back here, May 31st, right? We end up coming up here, it spikes up, boom, and then just absolutely craters, right? And then does what? At lunchtime. Woohoo! See you later. And wait till I show you the Qs. I remember this day. I remember this day. Now the Qs, look at this one. Huge spike up, 1%, dumps it on us. See you later. Just, oh, bye-bye. And then we want a huge run from there, okay? Now look at this one. I remember this day. Let me know in the comments if you do. May 31st. Huge spike up. I got this on extended trading hours, right? About 0.61 very quickly. And then look at this drop. 2.2% in 3 hours and 45 minutes. And then look at the recovery at 12:30. Woo! 1.85% in 3 hours and 30 minutes, right? The old, instead of the rainbow, you got the bowl effect, right? I mean, so that's what I'm saying. When this can cause some super volatility going on tomorrow, and where the Qs are setting and SMH is setting, you're like, okay, right? And this is why I'm not even going to bother going to like just individual charts, because this is going to change tomorrow, okay? And a lot of stocks like Nvidia and some others are sitting at very key levels as well, and so we'll see if they get a big bounce because they're down pretty big over the last few days, right? And so I told you to watch the RSI being oversold and all this stuff, and so we'll see what happens. Let me know what you think. Tomorrow, I'll be getting up early, just sitting in front of the computer waiting between like 7:30 and 8:30 to see what's going on, how the market, see if they wink leak it, as some people like to say. You never know, but it'll kind of let us know something. But if you see that big spike, don't be surprised if we get dumped on right back down, because it is Friday, and a lot of people do not like to hold over the weekend, especially in this market right now. So, and again, watch for the retest. So the Qs do spike up. What happens when it hits the 50? That's what we're going to look for. What happens when SMH hits the 50? Okay, that's going to be key, right? The biggest moving average you want to worry about is the 200. We're nowhere near that on so many things. Okay, that's really the big one, but the 50 is the start of things. So anyway, hope you guys got some out of it. Please hit the like and subscribe button if you did. Read all the comments. Feel free to sign up for the membership if you like the members videos. Go into Discord and get a morning news brief every morning with everything you can imagine. So anyway, have a good one, guys. See you tomorrow.